Here's one we covered at the last meetup. Basically, this is a contractor called Perspecta, and this is an IT contractor, and it's basically, again, a trend line intersecting a trend channel line. So the setup occurred here. Now, one of the things you'll notice is this is a big green bar. What does this imply? It implies that you don't have a decent low risk entry on this spot. So what can you do? You can either lower your position size because your risk is going to be from here to here, or you can wait for a retest. One of the two, right? So, but you can't take this at this point. It's too risky to take this trade, but it's still a good combo setup. So that's one thing. So you might have a good setup, but it may not be a good trade because you've got to get everything together before you can take the trade. So that's what makes it hard, because you've got to get this, you've got to identify the setup and then determine, is this really a good low risk entry at this spot? But this is something that you want to keep in mind. So within the next maybe a week or so, if this does come back down to retest it and gives you another low risk entry, it's a potential entry here. And target area would be up here, at least initially, and maybe a higher move up after that. So that's the basic setup. Now let's look at another one. Here's one that happened just 3 days ago. So again, connect the two dots, extend it forward. So here again, you'll see we did not get a low risk entry. Like, man, it's like, this is one of the things once you start doing this and recognizing this, you will see that whenever you get these good setups, stocks will gap up, or they'll give you big green bars, or they'll give you things that make it very difficult to enter that trade, because whoever is entering these trades, the smart money that's entering these trades, they've got their entries in already. So they're not letting you in on a low risk entry. So you wind up entering up here or up here, and like, darn, the low risk entry would have been if there was a nice small little green bar here, but it didn't give you that. It just took off. So that's something you want to watch. So it's just like I said before, a good setup doesn't necessarily mean it's a good trade entry. You still got to wait for a low risk entry. So here in a case like this, you might want to wait for it to come back, possibly retest this guy. Maybe it might form another setup down here. And you can see this is more of a shallow setup rather than a deep one, because it didn't come all the way up here. Ideally, it would have been best if it came here, but it did hit the Keltner band. This pink line is the Keltner band. So ideally, you want to have trades that come and intersect here. Here's another thing you want to keep in mind. When you've got all three pivots, you'll see this pivot and this pivot are within the bands, and this one is outside of the band. If you can get trades where all three of these guys, meaning all the three pivots, you don't have a third pivot yet, but this pivot and the trade entry spot, and all of these three spots are below the lower Keltner, the probability of it goes up even higher, because that becomes a very good pullback setup. Likewise, on a reversal trade, if you've got all three above the Keltner band and you had an intersection up here, that becomes a higher probability trade rather than ones in which the dots were not in there. So let's look at some other examples. So this is one, ISRG. If you're familiar with this stock, these are the guys who make the robotic, robotic surgery things. So again, same situation here. Here was your pullback setup, but didn't give you an entry. Like, darn, all these big gaps up that happen. Again, a combo 2 setup, pullback. Again, no entry, so we wait for a retest entry. And you can see these things. Like here was another, this was not a pullback setup, this was a reversal setup. Not a high probability setup, but did work. But
it's funny, I don't see it. Oh, here, at the very bottom right, over here, lead meeting. There it is. Okay.
Tom, did you want me to go to the right? Or
that's what you did. Oh, here we go.
Was that a question? Or okay, maybe not. I'm not sure. Okay. Well, anyway, in this case, this was a reversal setup. Not the best reversal setup, but a reversal setup. same exact thing. Now you can see these are reversal setups here, reversal setups here. This is a reversal setup that did not work. This one worked pretty well, it had 2 retests. Here's a case of a higher high retest than a fallback. Now, one of the things you can do with this is combine this on different types of either market breadth indicators or other types of indicators. So one of the things I talk about all the time is to do this on the VIX. Now on the VIX, you can actually draw these trend channel lines, and you can tell oftentimes well beforehand when the market's going to turn. If you're not familiar with the VIX is a contrary indicator to the market. So when the VIX is low, or when the VIX spikes up, chances are the bearish move is down. It's pretty much done. Now, one of the things we'll look at is trend channel lines that come into something I call the danger zones. Now, that's a big topic, actually. I don't know if I have enough time to cover it, but basically, these are zones that are way above the 200 period moving average. So when the VIX or any particular price hits these danger zones, it's usually over. That's the end of the move. So in this particular case, the VIX has hit the danger zones. What is this telling you? Is that more than likely the spike down is over. So it's actually, we're getting ready for a big up move in the market rather than a down move. And you can look back in the past, back in 2018, Christmas of 18, that big bearish sell-off that we had. What did the VIX do? Trend channel line to the danger zone. Back in October of 18, same thing. Look at all the major turns we've had in the market, and you compare them to the trend channel lines, and you can nail them very, very closely about where the markets turn. So these are all the big spike downs that we've had. Back here, and the one that we had recently. So this, as per this indicator right now, it's telling you the down move in the market is done, at least temporarily. We can expect a further up move. I'm not saying go ahead and put all your money in the market, because we just don't know, but at this point, the indicators are telling you the down move is over. So one of the things I did, since I've been doing this for many, many years, and I've been teaching this for many, many years, is that I actually wrote a program. And let me actually just go back in here. One of the things you notice is, if this is so good, right? If you can just connect these dots and extend it forward and look for prior setups, couldn't you just automate this thing so that you could, every day, you could just find out what stocks in a huge watch list are setting up like this? What stocks have this set up on any particular day? So that's what I did. I said, way back many years ago, I said, since this is so mathematical, there's no real quote unquote brains to it. It's just a silly formula, just the slope of a line, which we learn in high school at y equals mx plus b. That's just a simple program that you could do. You could write it, and you can find out all of the overshoots that are happening on a particular day. So that's what I did. So I worked on it slowly over piecemeal. I didn't do it all in one shot, a little bit at a time. And so then I came up with the program. So I wrote the program in a program called Microsoft Access. So I'll just quickly go over how this looks. Basically, we've got a bunch of stock lists on the left-hand side. So these are the lists that I look at. And you don't have to look at these lists, but these are the lists that I've set up. And for any particular list, there's a day that corresponds to it. So for example, like this is 1031. I picked a random day, 1031. And somebody in the audience picked another random days, but we'll look at the random day that they picked in a few minutes. But I just want to show you what the program looks like. So you pick the stock list, you pick the day, and it'll tell you all of the setups that occurred on that day. And basically, I categorize it by the actual setup, which is the trend channel line pullback, whether it's a retest, whether it's a trend line bounce, moving average bounce, whole bunch of different factors that go into that particular setup on that day. and how far it is from the 200 period moving average, how far it is from the Keltner band. Then I look to see, is it a perfect setup, meaning is it all of those three pivots coming exactly to the dot, et cetera, et cetera. Then I look at the location. Is it, how far is it from the 200, besides the 200 period moving average, how far is it from the 6-month high, 6-month low, et cetera. Then I look at the bar itself. Is it a wide range bar? Is it a doji bar, et cetera? All of these things are little filters that you can pick and choose. So, so let's actually look at the program. So I'm going to share. Give me a second. Share. There it is. Share.
Looks good.
You can see it, but I can't seem to see it for some reason. Okay. Give me a second. Let me share. Excuse me a second. Let me go back. Okay. Share. There it is. Share. Okay. Can you see it now?
Yes.
Okay, cool. So basically, somebody in the audience had selected January 16th as a random day. So like I said before, here's the stock list. Here are the stocks that are setting up. Here's a trend channel line pullback. This is a combo 2 setup. If this and this were on, it would be a combo 1 setup. And this is the location. And then if you scroll over to the right, any of the bullish candlestick patterns, the ones that I like are the inverted hammers, the perfect reversal bars, are the bullish engulfings. In this particular case, we got none of them, and we did get wide range bars. So let's actually look at the setups that occurred on this day. So these are the 3 stock symbols: FIBE, VSEL, and SGen. So keep in mind, just because a setup is there doesn't mean it's a good trade. It's just telling you these are stocks that are valid for trading, but you still have to use your judgment. You have to use your subjectivity to determine if it's a good trade or not. So with that being said, let's actually look at TC2000 on that day. VCEL. Now, can you see my TC2000 chart?
Not yet.
Not yet. Okay, let me scroll over real quick. Okay.
There
you
we
see
go.
it now?
Yep.
Okay, cool. So the 3 stocks, what was it again?
VSEL 5.
5. What was the third one? Let me go back to here real quick. Oh, SGen. Okay.
SGen, right.
SGEN. Let me write it down so I don't forget. Okay. So here's VSEL back on January 16th. Now, one thing that the program tells you, let me go back actually, is that, let me actually share this one more time. I'm sorry, because I may not have done a good enough job here. Now, one of the things I did is I have it going back X number of days. So right now,